everyone. This is Avijit Chatterjee recording a weekly session of Chartsarefun. This is for the week of February 23rd, recording this on March 1st in the afternoon. So the month of February ended, and the market is showing signs of turning over, as in turning lower. We'll look at S&P 500. We'll look at the two of the top weighted sectors in S&P 500, started with technology, which is about 33%. Next is financials, which is about 13%. We look at the top holdings of each sector in the technology space and then in the financial space. And then from there, kind of see what those charts are telling us. With that, our YouTube site and our blog site is substack.com, chartsarefun.substack.com. We appreciate you subscribing to that. It's free. And on YouTube, it's Chartsarefun as well. We don't provide investment advice. The goal is to really share interesting chart patterns, things that we think are fun, helping you in your market investments and your decisions based on technical patterns that we see in the market. Talked about S&P 500. We know that this has been climbing significantly higher from that April low. From that 48.35, it has climbed up, testing 7,000 recently in the month of January. So far, the month of February closed, and we can see that it closed slightly lower at 0.87%. So it's about close to 1% lower for the month. Key is now the MACD histogram has started curving lower. Last time we had that was in the early 2025. For a couple of months, the MACD histogram was below the zero, and then it climbed right back up. This is when the tariff decisions that were initially quite harsh kind of unraveled a bit. Deals were made across the various key regions and countries, and that helped the market revive significantly higher. Since then, now the MACD histogram is turning down again, a lot similar to what we now got in last 2022, kind of a pullback. And look at how when the MACD signal line went below the moving average line, the black below the red, for several months we had the downward movement in the market, and typically that followed with a test of the rising 50 period moving average. A similar kind of a test of the 50 period, we can see how far the S&P 500 has diverged from its 200 period moving average. The 200 is near 2,900, and we are talking about over 4,000 points, close to 6,900 is where S&P is. So that kind of a sharp and a pretty wide pullback could mean mean reversion, could mean at some point a pullback to test that 50 period. And we can notice over the multi-year time frame, every so often the market does pull back, test that 50 period, then again regains its climb, tests it, again regains its climb, tested it in 2022, and the most recent was in April of 2025. That was, of course, very sharp and very fast. We'll see what happens this time, but the early signs of the RSI dipping lower here and the MACD histogram beginning to curve lower gives us some worry that perhaps we could be setting up for a market correction ahead. Looking at the technology, the largest sector in the S&P 500, which is, as we said, 33%, over 33% of the S&P 500 are technology stocks. And we can see here a pennant shape. The tops, we can see are declining, the lows are climbing, but in this process of the MACD histogram, it has curved quite lower towards the center zero line. Hasn't dipped below it yet, but getting close. In another month or two, we could get that negative crossover like we got in the early 2025 and like we got in most of 2022 in that correction. So that kind of a pullback, we can see if it has to pull back down to test the rising 50 period moving average, that's at 97. And right now we are holding closer towards 138. So 138 towards 97, we're talking about 41 points or so correction from that 138 or so. So that's almost close to, if you say about 30% or more than that is potentially what could happen in the technology sector. Now, if you look at the core holdings of the technology sector, the top holdings, the biggest is NVDA at 15%, Apple at 13%, Microsoft at 10%. So between the top three, that's 38% of the technology sector ETF. So if you look at NVIDIA chart, we talked about it last week. We had said that earnings related momentum could take it up towards target that we had towards 220. It initially did get a rise after the earnings was announced that early afternoon. It climbed over 200, and then from there it sold off with concerns of Michael Burry and others saying that maybe NVIDIA might be getting a bit too um, stretched out in the sense that now they have over $95 billion of advanced purchase obligations that they had to do with their largest customer, from where they, not the customer, as the largest manufacturer of their chips, Taiwan Semiconductor. They had to outright get these commitments in cash and not push those out. So from 15 billion was what they had a year ago. Now those purchase obligations have exceeded 95, which Michael Burry considers that as a warning sign with the commitments that if these orders are not fulfilled for financial reasons or for any other reasons from their top customers, whether it's Meta, whether it's Microsoft or Amazon, all their top clients, or for that matter, Tesla, XAI, if those companies retrace their spending on NVIDIA, then that could be kind of a bad impact to the NVIDIA stock, its fundamentals. So here we can see again a similar kind of a pennant shape. The tops are kind of declining, the bottoms kind of rising. But if that breakdown happens, a key level that it needs to break below is 170 to a 212. So 170 to a 212 is $42. Subtract 42 from 170, that takes us towards 128 is potentially where this drop could happen. We can see that MACD in this case also kind of converts the histogram, getting ready to close below the zero center line. It's almost very close to the zero center line for the month of February. It ended the month of February down over 7%, and volume was not there to that extent as we have seen in the past, like in this kind of a pullback, but if it does, break below 170. Right now, it's a key level. If it can break above that level for this month, which is 197, then it could perhaps make an attempt towards the 220 target that we talked about. But near term, looking at this chart, if XLK pulls back, if S&P pulls back moving ahead in this next several months, and if this MACD is an early indicator of a drop below the zero center line, which means a downward momentum could increase or climb on NVIDIA, leading the stock price to fall. So that's something we're watching. Apple, the second largest holding, is also kind of forming a descending triangle, a horizontal level right here in the 243 level, and then the top is 288. 243 to 288 is $45. Subtract 45 from 243, that's below 200. 198 is potentially, which is not far from that 194 is the 50-period moving average of Apple. So that kind of a pullback from this descending triangle pattern is possible in Apple. And then looking at Microsoft, that already broke down from a descending triangle pattern, getting close to its target. So that 553 was a double top. It tested it twice, and it tested that twice when you had lower high on RSI. So that was negative divergence. And even from the higher high from 462 to 553, we can see RSI was a lower high. So negative divergence overall. That breakdown from 553 to a force, this was around the level of, the breakdown level here. Let's just measure where it is. This breakdown level was at a low of 420. So it broke down from 420 to 553. You're talking about $133. 133 from 420 takes it below 300. So that is kind of something for us to be careful about. Below 300 means it could go back towards below 342, towards the 303, or towards the 285, 290. So that's potentially where Microsoft could go down to something for us to be very cautious about. So now the other thing that we need to look at is the next big sector of S&P 500 is financials. That's almost over 12% of S&P 500. Here, broadening top pattern can be seen, a horizontal kind of support level here from where it broke. And we can see that it ended around 3.7% lower for the month of February. We can see that MACD histogram has already declined below zero. Like what has not yet happened for XLK or S&P 500, XLF, the financials, is already giving us a bearish signal, the MACD going below the zero center line. RSI has already started dipping, now at 59 from touching 70 earlier, a couple of months ago. So that is a sign of a bearish upward, like a bearish pattern moving ahead. And if you look at the top holdings of XLF, Biggest is Berkshire Hathaway. They had earnings over the weekend, not too good. 30% decline in earnings year over year. They have the largest weight at 12%, JP Morgan at 11%, and then Visa, MasterCard are together 7 and 5% respectively. So this is 23 plus 12, 35% of the financials are these top four: Berkshire Hathaway, JP Morgan Chase, Visa, and MasterCard. So let's look at those charts. Berkshire Hathaway, if you can see, is kind of a pennant shape. We take the bottoms and they're climbing, the tops are declining. If it breaks down from this pennant shape, could go and test the level of the rising 50 period moving average near 397, call it around 400 is where Berkshire Hathaway could pull down to. The JP Morgan Chase is a broadening top pattern as well. We can see the climbing highs and a horizontal base. That low is around 290 or 290 to a 335. You're talking about $45. 45 from 290 takes us towards 245. That's the drop that, from this broadening top that JP Morgan Chase could drop to. Visa is kind of a descending triangle. We can see that it broke down from this horizontal base with the declining tops. That measures, if we kind of hover around here, that horizontal base is around 326, 325. So 326 to 373, that's roughly what? Close to 46 or 47 points or so. 47 from 326, we are talking about closer towards 280 or so. So that's potentially possible of where we could kind of 279, 280 is where Visa could fall to. And that's kind of levels that we have seen in the past. 286 was the high of May 2024. And the rising 50 period moving average is at 266.99 or 267. So a Visa collapsing below the key 300 level. The low of the month of February was 303. It did reclaim some of those losses, but if it does break below 300, the level of 279, 280 is potentially where Visa could head. MasterCard is also kind of a descending triangle breakdown. We can see a horizontal base. Support from it has broken down. It closed right near it at 517. But if you take the peak at around 600 or so, you're talking about 517, let's round it to 520 to 680 points. Subtract that from 520, you're talking about closer towards 440 or so, which is not too far from where we see its rising 50 period moving average at 442. So 440, 442 potential is where MasterCard could head down to. Now, remember, MasterCard, Visa are signaling what the consumers are doing in the economy. Consumers get credit card debt. That's how they buy various retail purchases and so on. Them verging, on the verge of breaking down is not a good sign for the U.S. economy in terms of things to be concerned about. We know the rates are still quite high. And at the end, that's kind of giving some early signs that we could be seeing slowdown in the U.S. economy ahead if these two barometers of consumer spending are showing weakness in dropping down. So with that, let's sum it up. Let's look at S&P 500 again. This is an early sign of a pullback. The MACD histogram has begun to dip. It has not crossed below the zero yet, but getting ready. The topmost sector is technology. It is also getting close to dip below the MACD histogram, below the zero center line. The signal lines also started, converging and kind of starting to go below the red moving average line. So that MACD signal line and the MACD histogram curving lower is early signs, and so is RSI has now dipped below 70, early signs of this breaking down from this pennant shape. The largest holdings of technology are NVDA, Apple, and Microsoft together. They add up to 38%. NVIDIA is at a key level at 170. The break below 170 takes it towards 128. It is holding strong. Yes, on earnings, it did get a sharp pullback. It touched 200 in the after hours, but then sold off throughout the day, and it ended the month of February quite bearishly, down 7%. If it breaks 170, that's the key level for us to watch. We can see the histogram's almost ready to go below the zero center line, means a bearish trend setting up for NVIDIA. Apple has got kind of a descending triangle pattern, a horizontal baseline at 343 or so, or 243, with a top at 288. So 243 to 288 is $45. Subtract 45 from 243, that's 198. So that's where it's not far from the 50 period moving average, 194, 195. So that's where Apple could be headed. Microsoft is already broken down, but a key breakdown level is really from 420 to 550 53. That's about 130 points or so. 130 or 132 subtracted from 420 takes it towards the 298 or so. 298 or 297 is where Microsoft could break down to, for us to be careful about that. Financials is the second largest sector. We can see a broadening top pattern here. Key level is for if to break below its low of 50, from 50 to 56, 6.5. Subtract from 50, you're talking about 43.5 or so. So that's kind of higher than the 50 period moving average at 40.6 or so. So that's something for us to, the 50 period is at 40.6. So something around the 42, 43 is where the XLF breakdown measured is from that kind of broadening top pattern. We can see the histogram here in MACD has gone bearish. It has already dipped below the center zero line for us to be cautious about. And the largest sector in the financials, the top four, Berkshire Hathaway at 12%, JP Morgan at 11%, Visa at 7%, MasterCard at 5%. So if you add these all up, that's 23 plus 12, 35% of the financials of these top four. And if you look at Berkshire Hathaway, they announced earnings this weekend, 30% year-over-year drop in earnings. The new CEO now, Greg Abel, is running the company. Warren Buffett has retired, stepped down. This breakdown could be quite bearish for Berkshire Hathaway. We've got to watch it what happens after earnings when stock opens on Monday. But this kind of a breakdown could mean test of that rising 50 period moving average below 400 at 398. JP Morgan Chase is got a broadening top. That breakdown below its key level here, say 390 to a 335, that's $45. Subtracted from 290 to a 335 is $45. Subtracted from 290 takes us to 245. So that's potentially where the JP Morgan Chase stock could be if it breaks below 290 for us to watch. Visa is got a descending triangle pattern. That breakdown could take it a lot lower. And the same thing with MasterCard, that descending triangle pattern. It did recover the losses by end of the month, but if the decline resumes, we can see the MACD histograms are clearly signaling bearish trends with significantly below the zero center line, and the same with Visa, significantly below the zero center line. So those two are things to watch. And with overall market, we just say be cautious. We know that we are coming out of a geopolitical uncertainty with the Iran war, the strike, and we got to be very careful to see what the market does. Initially, there might be a spike in energy, might be continued uprise in gold and silver and so on, but those are extremely overbought. Gold, silver with their monthly RSIs over 93. One of them is at 95, silver, gold is at 93. At some point, a sharp pullback would come. And when those pullback comes, as we've said before, we could expect a market correction with the precious metals correction. So we've got to be very careful looking ahead. With that, good luck investing. We'll talk to you next week. Thank you.
We are not registered investment advisors and encourage our users to consult with their financial advisors before making investment and trading decisions. Nothing contained in our content constitutes a solicitation, recommendation, endorsement, or offer by us at Chartsarefun or any third-party service provider to buy or sell any securities or other financial instruments in this or in any other jurisdiction in which such solicitation or offer would be unlawful under the securities laws of such jurisdiction.